SAP, they've been really focused. They haven't actually come out with earnings yet, but since we're going to have so many earnings, the Germans love a good pre-earnings, and some companies do that. They kind of come out early, they get their stuff organized. And of course, when you run a massive ERP system, a little bit like Oracle, that can get their earnings, I think it's like 12 days, 10 days, where most companies take at least 30. SAP gets theirs out early too. So, Pat?
Yeah, so let's dive into that. There are a few countries that require interim reports. Korea and Taiwan are two countries, and EU and Germany, they don't require interim reports, but they're a little bit more open, and they're regulated to where if they've had a really good quarter, they want you to come out and say it. Very infrequently in the US do I see any more, aside from, a warning. Very rarely do we see an upside pre-announce, but we did here. And in fact, I think the most exciting part of it was cloud. Cloud revenue up 28%. And obviously, SAP doesn't necessarily stand up the biggest public cloud. In fact, it's mostly hybrid cloud, with the exception of some enterprise SaaS apps that they have. But up 28%. I mean, for a company that got zero and continues to get very little respect in the cloud, that is a big deal. SAP S/4HANA up 84%, which they're giving credit for their rise with SAP, essentially an easier way for customers to move over from standard HANA to S/4HANA. So we'll get more detail. I'm hopeful in the earnings call, but a company I haven't given a whole lot of respect to, driving increased cloud numbers.
Yeah, well, I mean, I think maybe I can take this, just briefly touch on SAP, and then maybe close up here, just kind of talking about what to expect in the week ahead as earnings start to fall. But you saw a company grow about 6%, year on year overall, total revenue close to $8 billion. You're seeing significant growth in cloud. This has been a target area for the company. Cloud is still a little bit nascent as to exactly what is cloud, but that's actually becoming more the normal than, so you'd say more the rule than the exception. The market wants to see SAP's cloud business grow. Being a legacy license-based software provider in ERP is a critical thing that runs hundreds of thousands of companies, but it's not necessarily considered sexy, cool, or fast-paced for growth. So people want to say, where's the growth going to come from? Well, for SAP, the growth is going to come from the migration to cloud, and that's encouraging to see that number continuing to go up. It should also help in time push the company's margins up. So it means not only more dollars, but more profit per dollar. And if there's any sort of leading indicator for that, look at some of the pivots from the likes of Microsoft and what they were able to do when they moved the vast majority of their licensing business to subscription and cloud business. It's just better. And most companies were willing to pay for it because they're willing to sacrifice the short-term benefit, or the short-term benefit of these monthly subscription payments, as opposed to these massive one-time annual or multi-annual licensing fees.